All right, great. Hello, everyone. We appreciate you taking the time to join the Investor Update. We'd like to wish everyone a Merry Christmas, Happy Hanukkah, Happy New Year. We're excited about the year ahead. As I've stated on prior investor briefings, it's been an important objective to reshape the shareholder registry, to attract and to keep shareholders who understand and who share our commitment to creating long-term shareholder value. As of 15 December, Amaero had 2,539 shareholders, with 86% of shareholders having a holding period greater than 1 year. Many shareholders have increased their holdings over the past year. To all shareholders, thank you for your continued trust and confidence. Pegasus Growth Capital, the investment firm that I founded, first invested in Amaero in May 2022. We led the $11 million capital raise. Then Pegasus fully underwrote a $10.5 million entitlement offer in November of 2022. And Pegasus again led the recent $10 million capital raise with $4 million investment. In total, subject to shareholder approval of the upcoming EGM, Pegasus will have invested over $21 million in Amaero. Next slide, please. One more, thank you. We worked tirelessly in 2023 to complete the company's restructuring and to reset the corporate strategy. As the Ukraine conflict further exposed supply chain vulnerabilities, bipartisan efforts in the United States began to take shape, and national policies to incentivize the reshoring of critical industrial-based capabilities gained momentum. And as the efforts focused on advanced manufacturing, with particular emphasis on supply chain resiliency and scalability for defense production, we set our sights on relocating Amaero to the US. It's hard to overstate the significance of the shift in US national policy. Just as globalization led to decades of outsourcing capabilities to lower cost jurisdictions, and foreign direct investment and relocation of jobs overseas was buttressed, the strategic imperative to reshore certain capabilities that are deemed critical to national security will have significant and lasting economic impact in the US, and will have significant and lasting impact on its industrial base. On 13 July, Amaero announced it was relocating its manufacturing and its corporate staff to the United States. And then Amaero had signed a 15-year lease on 9,300 square meter facility that was nearing completion. We announced that securing the nearing completion facility accelerated the installation of the first atomizer by approximately 12 months, accelerated achievement of break-even operations by approximately 12 months, and reduced the budgeted working capital by approximately $22 million. Importantly, we also signed a long-term economic development agreement with the Tennessee Valley Authority that included subsidized electricity rates for 10 years, evidenced by Tennessee's ability to coordinate support across multiple stakeholders and assign binding agreements in a period of 5 weeks. The state's pro-business climate, coupled with its concentration of industry and a highly skilled workforce, have positioned Tennessee at the forefront of the manufacturing renaissance. Next page, please. Thank you. The announced relocation to Tennessee enabled recruiting efforts that had been underway to fall in place. I would underscore this point. Why would so many of the most experienced, most respected professionals in additive manufacturing and powder metallurgy have chosen to join Amaero? I would attribute this to 3 points. Number 1, Amaero's strategy and vision. Effectively, Amaero is a startup that's on the cusp of commercialization. As a startup, we can more effectively shape our business, for example, our production schedule, to reflect our customers' most pressing needs, and to be responsive to demand, supply, and pricing signals. Essentially, we can be agile. Number 2, unlike the larger, more established industrial competitors, AM powder production is our only business. It's not 2% of our revenues or an after-fact consideration. It's what we spend all of our waking hours thinking about. Finally, and importantly, number 3, we are building an equity culture that aligns the economic incentives of the leadership team and of all employees with shareholders. Commensurate with their salary, employees receive generous stock option grants with at-the-money exercise price. The options have 0 intrinsic value when granted, but the options are increasingly valuable as we build shareholder value and the share price increases. Our employees' incentives are aligned with shareholders. The North Star is building long-term shareholder value. The final piece of the corporate strategy reset was to commit the production capacity of the first atomizer to C103 and other high-value specialty alloy powders that are critical to the defense and space industries. The U.S. has two most pressing development to production initiatives: hypersonics and strategic missiles. For the first time in 60 years, the U.S. has ceded a primacy defense capability to another superpower. Though the U.S. was first to develop hypersonic technology, both China and Russia have advanced hypersonic weaponry to production and deployment. The U.S. and its allies must deploy offensive hypersonic weapons to counter the threat, and this is priority number one. Given the Mach 5+ speeds, materials that can operate in high-temperature environments are required for mission-critical thermal protection systems and for propulsion systems. The first platforms to be deployed will be the U.S. Navy and Army's offensive Boost Glide hypersonic weapon platforms. Shortly thereafter, it's expected that the U.S. Air Force and Navy will deploy offensive air-breathing hypersonic platform with scramjet propulsion technology. At the same time, the U.S. is deploying a new capability in hypersonics. It's developing a next-generation technology to replace another primacy defense capability. The Minuteman III arsenal, our current generation of ICBM, or intercontinental ballistic missiles, will be replaced by the Sentinel missile platform. The Sentinel program will be much larger in units and in budget than the hypersonics platform. Due to the large size of the missile, coupled with the long range and the hypersonic speed at reentry, the strategic missiles will also have the need for materials that can operate in a high-temperature environment. Concurrent with the strategic imperative to invest in innovative new technologies for defense applications, the space industry is in the midst of an innovation cycle of its own for launch vehicles and for the deployment of satellite constellations. Again, the need for accelerated adoption of battery-manufactured 3D printed components and for materials that can operate in high-temperature environments. All of this underscores the demand for C103 and high-temperature materials. At the same time, supply is constrained and lead times are unacceptably long. In order to achieve the production targets, it's imperative that we stand up domestic, resilient, and scalable production of C103. However, most atomization technologies are unable to operate at high enough temperature to melt refractory alloys. And much of the atomization capacity that is capable is operated by large industrial companies whereby AM powder production is not core to their business, or the manufacturing is occurring outside the US. I want to take a moment to share a brief video that Eric Bono and team have prepared to give you a sense of this opportunity. Are you able to look at the video?
Okay. I'm sharing it right now. I just got swapped shares.
We're Amaero, and we're proud to say that we have the highest capacity and highest quality metal refractory powders in the world, including C103 and other mission-critical alloys. That sounds like a pretty bold statement, and it is. Here's how we're doing it. First, we started in the heart of the Tennessee Valley with our brand new purpose-built 100,000 square foot facility, and we dedicated it to powder making and processing. Next, we assembled a world-class team of metallurgists, process engineers, and operations specialists. Now, let's move on to our core technology, powder atomization. We atomize powder from clean, fully traceable bar in a contact-free procedure. This means a few things. One, we can provide you with certified full lot traceability, tracking our raw materials back to their original melt. And two, by definition, contact-free atomization means that our input stock doesn't touch anything during the atomization process, except for the atomization gas itself.
What happened, Russ? Russ, I believe it's muted on your side.
Point. Much higher than conventional powder atomization.
Can you back that up, Russ? You muted it. We didn't hear it.
Okay. Apologies.
As a direct result of the contact reatomization process, we have the ability to atomize powders that have a very high melting point, much higher than conventional powder atomization. Our dedication to cleanliness pushes us to never allow our powders to see the light of day. All powder processing and transporting is done with custom-designed equipment and process flow steps. The resulting powders are spherical and free-flowing with high apparent and packing densities and are available in customizable particle size distributions. Count on us for your most critical powder needs.
Thank you, Russ. Go to the next slide, please. Sorry, everyone, for the technical difficulties there. So back to the presentation. Okay, thank you. So moving on. So 2 weeks ago, myself and Eric Bono were in Washington, D.C., meeting with the offices of U.S. senators, congressmen, and other stakeholders to discuss federal funding for the Amaero. As I've stated before, I'm highly confident that Amaero's capabilities align with and support the national reshoring priority to create resilient, domestic, and scalable supply chain for advanced manufacturing and defense production. We've received strong indications of support, and we have begun advancing a number of funding initiatives. Last week, as you see here, our team was in Tennessee to attend the Defense Manufacturing Conference in Nashville to host business development meetings and to hold a planning session at our manufacturing facility at Chattanooga. We're excited to announce, which you can see in the background here, the first atomizer has been delivered to Tennessee facility and the construction for fit out has commenced. We gave prior guidance that installation of the atomizer would commence on April the 1st, and I'm pleased to share that we are ahead of schedule. Beginning with progress in December and looking ahead to 2024, we have line of sight to important milestones. Subject to shareholder approval at EGM on 22 December, Amaero will have completed a $10 million capital raise. The capital raise, as I said, was led by Pegasus, was upsized from 8 million to 10 million, and was greater than 50% oversubscribed. A good outcome amidst a very difficult capital market environment. We are in advanced discussions with the U.S. Bank to provide a corporate credit facility. As mentioned above, the first atomizer has been delivered to our facility in Tennessee. Final design and engineering of phase 1 of the project is completed, and we have commenced construction of the fit out. As again said, we're ahead of schedule to commence installation of the atomizer from the prior April 1 date. We have completed a comprehensive market study with Fairmont Consulting Group. This merits more commentary, and I'll further discuss this on the next slide. We're finalizing engagement with the U.S. Investment Bank to advise Amaero in connection with strategic financing, corporate strategy, and financial planning. We're finalizing the purchase order for a second atomizer. We're advancing commercial discussions with multiple parties that pertain to offtake agreements and to feedstock supply agreements. And we're advancing federal funding discussions. We expect it to be a very busy March quarter. I mentioned the Fairmont study merits more commentary. Fairmont Consulting Group is a leading consulting firm focused on the defense and space industries. In order that we can make well-informed strategic decisions, allocate production capacity, and build a well-reasoned, comprehensive financial model, it was important to have an independent and informed consultant develop a bottom-up, program-by-program build of the demand for C103, and that we had survey data for C103 market pricing. Mind you, the demand signals are complicated due to the classified nature of some of the programs and the development stage of some of the programs. Fairmont's engagement produced 3 outputs, as you see on this page. First, a robust, bottoms-up, program-by-program data set that included 550 discrete programs, and for each of those programs, the discrete parts that would be additive manufactured via C103. The program focused on 4 areas of interest: hypersonics, strategic missiles, space launch vehicles, and satellites. Number 2, to the far right side of the page, was a 61-page comprehensive report that analyzed at a program level the discrete data, the demand drivers, known C-103 use, opportunities for additive manufacturing in C-103 insertion, demand risk, and estimated C-103 addressable market. The first 2 we view to be very proprietary and will be used for internal purposes and to inform our planning. The third one, which is in the middle of this page, is a 15-page executive summary that aggregates data and provides key conclusions that will inform production planning and the financial model. Based on Fairmont study and the collective work of other consultants, including final CapEx numbers as it relates to the fit-out and updated CapEx numbers as it relates to the CapEx equipment, we plan to lodge a comprehensive investor update with the ASX and share with investors in late January. With this, I would be happy to take any questions. Thank you, Russell.
Thank you, everybody. So we're going to move to the Q&A session. So right now I see that we have 2 people who have submitted questions so far, but just a reminder to either submit questions through the Q&A function, or if you'd like to verbalize your question, please feel free to raise your hand, and when I call upon you, your microphone will be allowed access. So the first question is from Tim Denton, and he asked, what was the reasoning behind not providing existing shareholders an allocation in the recent capital raise?
Yeah, thanks for the question, Tim. And we received some comments and clearly some frustration from existing shareholders that they were unable to participate in the recent capital raise. You know, I would step back a bit, and as a company share, you know, we're a business that management and the board own over 40% of the registry. We pride ourselves on being an investor-first company, and we understand and take very seriously our fiduciary duty to all shareholders. At the same time, we've got an unwavering commitment to make sure that we properly fund this business and that we maintain a very strong balance sheet. We reached out, broadly speaking, as some of you may know, I was in Australia in late October, and we had numerous conversations with funds in Australia as well as some investors. And in many cases, in fact, in all cases, we were told that many of these investors wanted to see us have an offtake agreement in place or further commercial development before they would commit to invest. At the very same time, we had the consideration that a year ago, we had an entitlement offering. The entitlement offering a year ago obviously was intended to have broad shareholder support. Nonetheless, we had 15% uptake in that entitlement offering. And as you may recall, the share price traded down below the offering price and stayed there for a period of time. And so the board felt that it was imperative that we secured the capital, that we did so in the most efficient, seamless, and least disruptive way to the business and to our share price, and that we move on with the growth initiatives that we have in front of us. The other thing that I would add is we did receive many inquiries once we announced the capital raise. I probably received direct inquiries from on the order of a dozen investors. Those were forwarded to Alpine, who was our corporate finance advisor. To my knowledge, all of those investors were given the ability to participate. And moreover, we reached out proactively to about the top 50 shareholders in the registry to solicit their interest in participating. As you may well know, with the placement, we are limited in that we can only involve accredited or S708 shareholders in the investment. So I appreciate the question. I understand there was some frustration of shareholders. We apologize. We feel sorry about that. Nonetheless, all considerations, we felt this was the best direction forward. And the EGM will be held later this week to vote on as far as shareholder approval of the various motions.
And I do just want to add as well that Tim also says congratulations on the success so far, and he appreciates the hard work you have done, Hank, for the company, and wishes you a Merry Christmas. So
thank you.
I want to add that as well. We're going to Shawn Partners in the Adelaide boardroom. You guys can speak now. You do have to unmute yourself.
Can you hear me?
Yes.
Yes.
Hi, Hank. Stephen Martinson from Shaw & Partners here. Thank you for the update. I'd just like to draw your attention to page 10 in terms of your finalising engagement with the US Investment Bank to advise Amaero in connection with strategic financing, corporate strategy and financial planning. Can you possibly expand on that and just give us a sense of, is it a 6-month review, 12-month ongoing relationship? And or have you discussed, when they're expected to report back to you, or is it too early at the moment?
Yeah, Stephen, thanks for the question, and thanks for you and Sam and many others at Shaw for the ongoing support of Amaero, as well as your insight over time. We have not announced the company, though I will say this is a very, very well-respected investment bank and M&A firm in the US that I have a long-standing relationship with. They also have been close to the Amaero story for a long time. They have already been engaged with the board. We've already begun discussing their views on strategic financing and calendar year 24, long-term corporate strategy, as well as they have helped us build a new financial model that takes the output of the Fairmont market study and builds a comprehensive financial model, including demand signals, supply signals, pricing, et cetera. And so I would expect that we would finalize this engagement very shortly, certainly between now and the middle of January. We will announce it at that time, and I think this will be a significant event. And again, as you know, we have shifted the center of gravity to the business in the US. We've shifted the center of gravity to the executive team in the US. I would expect over time that we will have more and more strategic investors from the US. Strategic investors, both from industry as well as financial sponsors. I might add that part of what prompted us to engage them is we've received numerous unsolicited outreach from investors looking to strategically engage with the company. And we need a very systematic process to go about review this, as well as, again, resetting the strategy going forward. I will tell you that since announcing C103, there's been significant interest, as well as since announcing the move to Tennessee in July, giving all of the focus on reshoring these critical capabilities in the US. There's been significant interest. So this will be one of the more exciting announcements that I would anticipate that we will make in January.
If you still have another question, please unmute yourself, Sean.
Okay, thank you, Hank. Appreciate that. Just moving to you're finalising the purchase order for a second atomizer. Would it be fair to say that you expect to complete that in the March quarter, and then also give the market a sense of what the second gas atomizer will be used for?
Yeah, again, a great question. So as it relates to announcing the purchase order, I would expect that would be completed and announced in the first quarter, and likely early in the first quarter. Importantly, the comprehensive investor update that we plan to lodge with the ASX in the month of January, we will take the market data from Fairmont. And what we would hope to do, and again, all of this, of course, we'll have to preview with the ASX, and will have to be supported by independent studies. We would hope to be able to lay out in some detail our production strategy and our production schedule as it relates for the multiple atomizers. We have room the way we are designing out our production area for 5 atomizers. We have plans to order 4 atomizers at this point, and we'll remain somewhat flexible with that. But I would hope that the investor briefing that we submit provides a comprehensive overview, if you will, of our production planning, the resulting revenue, gross margin, net margin strategy as well.
Shaw, do you have any other questions?
Shaw & Partners? Can you
Yes.
hear me okay? Just a question, Hank. I was wondering, what can you share with us on the Fairmont research? Obviously, you plan to, you've got some detail here. Is there anything we can glean from the report, or you can talk about at this stage?
So here's how I would frame it. If you go back to when we first got involved with Amaero, the business of Amaero was to have one gas atomizer located in Victoria, dedicated to titanium. Right? That was the business plan. And the company had lodged an ASX announcement, earlier ASX announcement, giving guidance that that one atomizer producing tight powder would have revenue of about $40 million. One of our reasons for closing Victoria and going another direction was we felt it was subscale. And as you might recall, we subsequently announced that we would expand to 4 atomizers. If you do the math, and by the way, that 40 million was Australian. If you do the math of 4 atomizers at 40 million, you're 160 million Australian, or roughly $100 million US. So that would have been the revenue based on prior guidance for 4 atomizers producing Ti-6-4 powder. The benefit of going the direction that we're going with C103 and with the specialty alloys, and this comes back to your question about Fairmont, is obviously the price of C103, and we've now had at least 2 research reports that have come out with some independent views on this, is multiples higher than Ti-6-4. The Fairmont study, I would say, has confirmed that independently as far as the price signal, as well as importantly, they have confirmed the demand signals. The board is now looking at how do we take the Fairmont study, how do we take the raw data that we've provided and prudently plan for production. So how quickly do we ramp up production, that is number of atomizers and number of shifts per atomizer, and how do we dedicate production capacity? What we have said previously is the first atomizer we will dedicate to C103 capacity. That is that if you think about a cascading waterfall, we will take all of our capacity and produce C103 so long as there is demand. Then with any excess capacity we have, we would then create specialty alloys. And you would go down till eventually we get to atomizer 3 and 4 that primarily is Ti-6-4. I would say on the Fairmont study, again, back to your question, there were no surprises from our earlier work in the internal work that we've done as far as the revenue lift and the net margin lift. I will say they've given us much more granularity on these demand signals across the various verticals of hypersonics, strategic missiles, space launch vehicles, and satellite constellations. And so in each of these, we'll have a different go-to-market strategy. And in each of these also, it creates some interesting opportunity for strategic investors and strategic capital. So I'm not prepared to speak with more specificity at this point around the report, but I would say there were no negative surprises and very granular data that I think supports the strategic decisions that we made earlier this year.
Are there any other questions from Shaw and Partners?
Yes, just one last one from me. You've touched obviously advancing commercial discussions, including offtake agreements and feedstock supply agreement. You brushed over it, Hank, in your presentation. Can you give us some line of sight, or or can you just touch a little bit more or a little bit more detail on that comment?
Sure. So I believe that's Stephen's voice. The way that I would characterize this is historically in the materials world, and now you're dealing with, let's say, a commercial client, whether it's a prime defense contractor or a first-tier supplier. Historically in the materials world, they're going to want to see you commission your equipment and then in turn qualify your powder before you receive an offtake agreement. So that would be the case of, say, Ti-6-4. In the case of titanium-6-4, a prime or a first-tier supplier might already have 6 odd suppliers, okay? The good news is with the team that we have in place and with the technology, we will be added as a supplier for Ti-6-4 over time, but it will be a longer process. I think the benefit with C103 is because you do not have adequate supply today, and because you have a very pressing need on the demand side and a sense of urgency, given the timeline of these projects, we think there's a chance that we can accelerate the path to an offtake agreement. And if you think about it, Stephen, there's 2 potential parties. There is a commercial party. Think of someone who would be a long-term production customer of ours. But then separately, there is the prior to production or the research and development side of the equation. And the research and development side of the equation is going to be very, very important for refractory alloys, for C103, for high temperature alloys, because they are in this next generation of weaponry. So someone such as an Air Force research lab, someone such as an Army research lab, an Oak Ridge National Lab, To the extent we can collaborate and enter into an agreement with these organizations, that will be a very significant step to having the inside track for technology insertion in these programs over time. So without saying more, I think that you could conclude that we are pursuing offtake agreements with both, with commercial counterparts and with research and development counterparts. We don't know with certainty when that will happen, but it is something that we're advancing as quickly as we can. And I do think it will be one of the more significant developments, particularly as it relates to bringing on investors such as mutual funds and things such as that.
So we're going to move back to the Q&A, written Q&A. So I know that you just touched on this a little bit, Hank, but Finola Burke wanted to know if you could provide some additional high-level metrics on the Fairmount review, such as market opportunity and Amaero's participation, and then directly related, actually, because these questions were asked before you answered the Shaw and Partners question. Mark Tomlins also wanted to know if the executive summary will be made available to investors to assist them with financial modeling for Amaero.
So a version of the executive summary will be included in the ASX report that we lodge. And obviously we've got to work with the ASX on this, and we expect to do so in the course of January. And we would hope, now that we've got independent data, that we will be supported in providing the type of data that analysts will need to create their own financial model. Obviously, that would include demand signals, that would include supply signals, and that would include pricing signals. And so that would be our hope. On the demand side, I would say Fairmount supports the underlying and underpinning demand assumptions that we had made when we made the very important strategic decision to dedicate atomizer number 1 to C103. That's not to say that 100% of the capacity of the first atomizer will be C103. It is to say, though, that we go to the market with this capacity. Today, there is zero, excess capacity or supply in the marketplace. And so that will position us very, very uniquely within the marketplace from a supplier standpoint. I can't really say much more than that, Finola. I would say that, and Mark as well, on the pricing side, I've now seen Finola has put out some very good research, and Curran & Co. has put out some research, both of which did independent studies on the demand side and the pricing side. I would simply say, without commenting on their research, of what I'm aware of from industry contacts and from the Fairmount report and others, there's nothing that we've seen that calls into question the underlying and fundamental assumptions that they've made.
So Phil Kaywood would like to know if we are on track for June commissioning.
I'm sorry, did you say this is Phil Kaywood?
Yeah, Phil Kaywood. Yeah.
Yep, great. Hello, Phil. Yes, I think that, going back to when we moved to Tennessee, a very significant part of that announcement was identifying and signing a lease on this nearing completion building, right? It not only accelerated our path to market by 12 months, but it mitigated a significant risk of having to do a build-to-suit operation. We announced earlier this year that we expected to begin installation of the atomizer April 1, and we expected to commission the atomizer by June the 30th. What I can say today is we are ahead of schedule. And I think it's fair to say that we are ahead of schedule on both fronts. I have the most visibility and line of sight to when we will begin installation. By the way, part of that is not only coordinating with our team, but we will be flying in support, if you will, from the manufacturer in Germany. So you might imagine this is already underway to coordinate that support and establish those dates. And thus I can say with the confidence I can that we're ahead of schedule. I suspect that we'll give the market a further update of that between now and the end of January.
Phil would also like to know if there's any update on the track of an offtake agreement that was previously mentioned.
Yeah, nothing more so than what I said earlier.
And do you expect how many offtake agreements would you expect for it to take 100% of production?
I don't think that we would be willing to sign offtakes for 100% of production. I think part of the value that we add in the ecosystem is to have a certain amount of flex on our production capacity. So this is not a lithium mine or some project where you want to sign offtakes for all of your capacity. I think the way to best position us with the industry is to have affirmation of commercial customers, affirmation from the research and development community, evidenced by offtake agreements, have offtake agreements that support a significant, if not all of the revenue that we're projecting for calendar year 2025, but then maintain some flexibility in our production schedule going forward. So one should not assume that we will have offtake agreements for 100% of our production capacity, as that won't be our go-to-market strategy. We will, though, seek to have significant offtake agreements with multiple parties that I think will evidence and affirm from a validation standpoint our commercial support as well as our support in the research community.
Thank you. That's the end of Phil's questions. He also wanted me to thank you and said he's looking forward to 2024, as I think many of us are on this call. It's definitely a very exciting time. Does anybody else have any other questions before I just close this out?
As always, happy to take live questions as well, so people can feel free to speak up just as the Shaw Partners did. Yeah,
and just a reminder, this is not a or forever hold your peace. We're always open to hearing to receiving questions if you can't think of them at the time after the fact. Okay, I don't believe there's any additional questions.
So in closing, if there's no other questions, I would remind everyone the session has been recorded. We will quickly upload this, and so it will be posted on the website, available for others to see. And lastly, I would like to say, first of all, an enormous thank you to our team. Eric Bono, Jay Chandran, Chris Ganlon, Ken Davis, Ron, Fred, Dave. We have assembled, this is a single thing that I am most proud of, is the team that we have assembled at Amaero. And I think it will speak to our ability to penetrate the market, to establish a moat around our business, and to be essential in the ecosystem, number one. Number two, we've got a very dedicated board, of which and from which we have significant investment. I'd like to thank our board that is very involved in supporting me and helping with strategy. And then most importantly, albeit lastly mentioned, our shareholders. I continue to have a top priority is to reset our share registry. I want to grow our shareholder base, but importantly, and this is I want to distinguish between the two, and no disrespect intended, but I don't spend a lot of time worrying about the shareholder who's trading our stock. And I don't spend a lot of time trying to make money for the shareholder who's trading our stock. What we're trying to build is long-term sustainable value. And that will continue to be our focus. Our focus is not next week or next month or next quarter. And I believe to the extent we stay focused on execution and we deliver the strategic vision that we have, shareholders will be rewarded with a share price that is significantly higher than it is today. And as I said earlier, that's our North Star. And with that, I'll conclude. Again, Merry Christmas, Happy Hanukkah, Happy New Year's, and very, very much appreciate everyone's trust and confidence going forward, and look forward to speaking in the new year.
Thank you.
Thank you.